But so housing track after housing track.
Newport. Yeah. See it coming in. I can't believe that they're doing this because the transportation system is inadequate.
Yes, and I mean, I couldn't count the number of developments, and you understand that each one of those developments is definitely how many homes.
Thank you very much.
Okay, the meeting is started. This is the Finance Committee meeting, and the agenda for the meeting is that we will start with responses to our RFP for proposals for auditing. And the first response we have is from Leaf and Cole. Michael Zizzi, you know us, we don't need to go through an introduction. So the meeting, the process here is we have 45 minutes. And if you were to take 44 minutes in a presentation, then we would only have 1 minute to ask you questions, and that would be the end of it. So we have 45 minutes. And we can start with any comments you have, any presentation you want to make.
No, I did not form a presentation, again, same reasons, you're familiar with me, I'm familiar with you. And again, I'm not a marketing person, I'm a bean guy. And so I would just leave as much time for as much dialogue as you can have.
Okay, very good. I appreciate that. We had a difficult audit last year with FEMA. And I want to, we probably won't have one this year for FEMA because we don't have any FEMA money specifically. There may be some that trickles in over the year, but it's not going to be like it was last year. However, with expected rains, that could occur again. And understanding our organization, what accommodations can you tell us you can make to prevent what happened this year, and that is that the audit was presented. I am not happy about that. And I think we need to think ahead in terms of being able to prevent that. And I'd like to know what your thoughts are about that.
In Canada, I don't think anybody was happy about it. I don't think Jim was happy about it. I know certainly we weren't on my team. Years ago, even in a non-FEMA year and with a FEMA year, the loose CFD was always the first audit out of the gate. We would start working on your audit, and we've been working on it by now. As soon as you reconcile the banks, and we would jump on that. Again, you're not a complex organization. I mean, in a non-FEMA year, what FEMA adds to it, and it isn't even really all that much complexity, because the bulk of the work that you do, whether it be road repair or certainly road replacement, is all contracted out. I mean, your organization is primarily more administrative oversight, inspection.
Although I will tell you, that is changing.
Yes, and that's what Jim was
Yes,
doing.
it isn't substantial compared to the overall amount that we contract out, et cetera. But it will be some, and it will become more substantial, I suspect, as time goes on.
And you probably have more control over it.
Right.
If that's the case, which, benefit the entire community, I would imagine. But getting back to the topic at hand, which is that, when we establish, and any CPA firm establishes their scheduling, you sit down with our clients, period is that you're scheduling, and we tend to schedule in 6-month increments. So we lay out all of our scheduling and we make sure that we don't overlook the work that we're doing so that we can serve our clients. But that means that, the work has to be ready to be audited at an appropriate time. Because if you're not ready at the appropriate time, then, we've scheduled you in this slot, we've scheduled somebody else in this slot, and set all this up. Typically, right around now is between mid-June, mid-July is typically when that work would be done. We haven't done that with your organization at this point, simply because we're having this conversation today. Again, that said, so if the work is there to be audited, then we're ready to audit. Now, last year was an exceptional year on all fronts. The bread and butter of our audit practice, as far as the special districts go, is organizations such as yours, which tend to operate very, very lean, which means that you typically got one accountant. You're not Rancho California Water District, probably has 3 CPAs, 5 customer service representatives,
Or more.
all that. Yeah, you've got Teresa. And so she's got to do all the day-to-day, which is the normal workload. And that's normally, if that's the case, then we should be doing your audit right now. And that, the state controller's report used to be due in September. And we would have your audit done in advance of the state controller's report, and we would issue both of those at the same time. We did that for years. Last couple of years, again, principally with FEMA and other things, your organizations tend to get bogged down. And so you're not ready in that timeframe. Well, the whole world is ready. Once you get beyond Labor Day, everybody wants to be Labor Day, to mid-October. And so again, much like this organization, we've had a relationship for many, many years. We have other clients who've had relationships with for many, many years. And so, we just go in those slots. And so when we miss the mark, it makes it difficult because you operate lean, we operate lean, in that there's not a lot of other spots to fit you in. But we still have time. We leave ourselves enough leeway that we can get you in, so we'll fit it in by the end of the year. There's always enough time because everybody's, really anxious in that, again, September to mid-October. A lot of people want to go to the board in October. Some will go to the board in November. And in a worst case scenario, it slides out and maybe we're going to the board in December. And that tends to be the worst case scenario. Now, if you're not ready still, when we get into that November, December timeframe, that really creates problems. Because again, it isn't just us. It's, every CPA firm has more work than they know what to do with from January to April. We're already working, 13 hours a day, working weekends. And that's because that's when we make money. The summer work that we do, and again, this is the same with every audit practice, is that you pick up enough work to keep your people busy to survive the summer so that you can make your money on the back end. So what happened in this particular year, which was we weren't ready in August, we pushed it back, and obviously it takes us all the way around October 15th. We got to that time frame in October, November, still weren't ready. And so we were still trying to get information, gathering as far as we could, even during the holidays, Thanksgiving, Christmas. I can push it out to about January 15th. But once you get into January 15th, I've got clients, again, that I've had for 25 years. And I can't share the pain. It's not, I can't make them suffer because we haven't delivered the time frame. Way overburdened because of the complexity of FEMA. Again, Jim's indicated that you've got methodologies now that's going to make our record keeping, which hopefully will make it a lot easier to give FEMA what they need and make that not be so time consuming so that we can get the underlying accounting done in an efficient manner.
Right now, you mentioned that you have these timeframes.
Right.
And it sounds like there's no flexibility there.
Well, again, there's always flexibility, but the flexibility is in the scheduling. The flexibility is having that discussion in June and July when we're negotiating with everybody else and go, okay, listen, I can't go, I've got FEMA this year, I can't go here, but I can be ready October 1st. Then I start having discussions with everybody else and trying to see if there's anybody who can move up. last year was an exceptional year. Again, I used to say, oh, because of the pandemic. But it's not because of the pandemic, but it is to some extent because it's the culture change that's happened since the pandemic, which is that everybody's been working at home. And, people will tell you, oh, I'm more efficient at home. Well, you're more efficient because you didn't drive to work, but you're not more efficient working. I think everybody's taking way more, what they call 10-minute breaks.
Right.
Because the work just is not getting done as timely. Now, last year, again, to pile that on and to look at it from our fault, although not really. I did have two other special districts that again operate just like you do in a very lean capacity. So picture yourself if Teresa were to leave tomorrow, which has been what's been happening in the last 2 years, is what everybody's called the Great Resignation. So I had two other special districts that they didn't have, they didn't have the FEMA issues that you had, but they had staff turnover, which meant that they too weren't ready when they were supposed to be ready. So that whole window in, Thanksgiving through Christmas through the end of the year, where we usually have, where we've left wiggle room to get everybody done, I now had 3 clients that all needed to make
Was it because of FEMA?
use of that time. Your situation was FEMA.
Yes, so
Theirs was staff turnover. I had 2 other
Okay.
districts,
okay.
again, that operate with essentially 1 accountant. And so, and again, when you turn over your staff, Teresa's in the cone of silence, and we're saying that Teresa walks in tomorrow and says, yeah, I'm leaving in 2 weeks. Well, your process of replacing that person moves at a glacial pace.
Sure it does.
You've got all these rules you gotta follow, but you gotta list it, and you're gonna interview internally, and you're gonna interview externally, and this whole process. So it takes you about 2.5 months to hire somebody. So now, not only do you have a new person who has no history with the organization, you also have 2.5 months where nothing got done. And you might bring somebody in that can write checks and get bills paid, and that's about it. So that's what my other 2 districts were. And so when we got to that Christmas timeframe, and I had three clients at that point in time. Now, we still, to some extent, on your end, we're still not particularly well prepared at that time because Teresa was so overworking getting the FEMA ready. As we talked about when I presented the financial statements, I showed you the trial balance. The auditing process is supposed to be, trust but verify. Our job is to come in and you say, okay, I've got, 5 million in assets. We come in and we go, yep, you have 5 million in assets. Our job is not to clean up your books. And so that's an extra service that we provide that not everybody else provides. And that, we understand that, and that's why we talked again at the audit committee, I said, our bread and butter is working with small districts that have a lean staff, so that if you need help, we're here to help you. So that, when it comes time to, this year we're gonna have to implement the new lease pronouncement. We expect very much that we're going to be very hands-on in that process and help all of our clients get through that process because they just don't have the expertise on hand to dive into the audit pronouncements. Not everybody does that.
Just one other question I should have started with is, who are the members, who are the people we're going to be working with specifically?
There's only 2 members on your staff. Again, there'd be another if you were a taxable entity and then I would bring in a tax expert. We don't have that
Who are?
situation. And so Ryan Keaton is my audit senior and myself.
Okay. One other question. I understand that, I understand that it is good practice to change auditors every 3 to 5 years. Okay, and if you don't change auditors, then you should change the partner. Okay, what do you think about that?
I don't disagree with that. I will tell you that, and again, it's funny that you say that, and I've told the story a number of times. Aqua actually came up with, they had, a blue ribbon committee, they went out and selected this, they came up with this idea that you should rotate auditors every 5 years. And the chairman of that committee was Gary Aron, who's the general manager of South Water. I just now rolled off of Gary's work after 13 years. He was the chair of the committee, so it tells you what he really thought about it. I think that if you've got an expertise in your situation, again, is a little bit different in that because you operate so thinly. And again, I always worry about turnover internally in your organization, that if you're constantly changing auditors and you lose your staff person, you've lost all of that historical perspective.
How long have you been working with us?
I've been working with you since 1993.
Well, that's a long time.
Yes.
Long time. And have you seen a lot of changes within our organization? And not staff-wise, but how we handle?
Well, certainly the way that you process things has changed differently. I mean, this went back before we had, any kind of GIS or even the pavement management system before that. And so a lot of things predated. So we've watched an evolution take place, which is nice. But again, what you actually do hasn't changed that much. I think if you're going to start, as Robert indicated, if you're going to be doing more of the maintenance in-house, that's going to be a significant change.
Well, there's another issue that's coming up. We should be receiving next fiscal year, gas tax. Now, how is that? I mean, do you have other organizations that receive gas tax? And how do they handle it?
No.
So no.
But I mean, again, like anything else, you're going to fall under the revenue recognition properties or principles are what they are, which is, again, you look at, do you have an exchange transaction or do you not? In this case, you're talking about a gas tax. That's not an exchange transaction because there's not a one-for-one being exchanged. You just got the proceeds coming in, and
Right.
it is
And there
what
are
you do with it. So at the moment that you actually have, again, and I'm not sure how the gas tax works, if you levy it or if you just get it, because we handle it different ways. Yeah, so, if it were a levy, then we would recognize it when it's levied. If it's just a pass-through, then we don't recognize that on a cash basis. You don't know what you're gonna get until you get it.
True.
What about the trash
Yeah, the trash.
and the calorie cycle?
That's
Because
coming
that's
up this
coming up.
next year, starting January 1st.
And we are responsible for enforcing that. So, I mean, it's, even though we don't necessarily pay money or receive money, there's probably going to be some requirements that we have relative to state government requiring us to look at that and that sort of thing. And I'm not quite sure.
But again, you're talking, at that point, you're talking about on the expense side. You're talking about what your responsibilities are. Again, you fall back to generally accepted accounting principles. I mean, you're going to be subject to when did you incur the expense? When are you, it's kind of the opposite of again, accounting department's called topic 606, that's the revenue recognition. But it all comes down to deliverables. Again, do you have, have you, again, on the revenue side, have you done everything you needed to do to make that money not be refundable? So at the time when you're talking about the gas tax, if the county just turns it over to you, you didn't have any responsibility to do anything for them to get those proceeds. So you've completed your earning process. Opposite thing on the expense side, again, if you, have to hire somebody to, drive through your communities and make sure that, people are in compliance with whatever laws and regulations the state is dictating, then as you incur that expense, again, whether you paid it or not, accrual accounting would say you book the expense when you incur it. You record a payable, and then you get cash payable at the time you actually pay it.
Now, the gas tax may be another ripple, which is that it is an income, and you're absolutely right about that. But there's probably going to be requirements in terms of how it's spent, the county's probably gonna have a significant number of requirements. First, how does that impact you if they require us to keep track of how it's spent and where it's spent, et cetera? Number one, and number two, it's going to affect us, which means that although probably not as bad as FEMA,
No,
it's going to have some impact on our small staff because it's going to require additional work for us.
Certainly. I mean, the first thing that I would do is again, if you're going to have monies that are dedicated to a particular purpose, that's a separate account for it. So that way,
okay,
you know, because it's much easier to track without a lot of complexity.
Sure.
If I'm out of money, I'm out of money. And so I know if I've overdrawn that account, because oftentimes if they do an allocation within the accounting system, until you get to the end of the month and you've reconciled the cash and you go, oops, we overdrew that account by $12,000. You don't know until you get to the end. Whereas if you're actually pulling the cash out of it and actually using the accounts payable module, you'll know because if your cash doesn't exceed your payable, you're out of money.
Mhm.
And so that's, step one. Step two is that if you've got revenues that come to you, again, for a dedicated purpose, that is, we call it restricted if it's an outside force. So, if you've got an agreement with a third party, then you've now got restricted monies. Where we typically see that more times than not is, if you went out and issued a bond.
Right.
And
Yeah.
they give you the money to do the construction project. Until you spend that money down, that money is restricted to that purpose. You've got what we call, in general accounting, we call it restricted net assets. In your case, we call it restricted net position. But that's, so you've got a different section in your equity account. When you put your financials together, you would disclose either on the face of the statement or in the footnotes exactly what the restrictions are that are on the restricted net assets that we have. So in this case,
And we're used to, we had a bond since I've been here that we've paid off, so we've got accounting for it, so.
yeah.
It's additional work, but
Right.
My real question, I understand all that,
Okay.
and none of that's complicated, I understand that. But the real issue is the restrictions they're going to put on it. We're going to have to develop a process. We're going to have to implement that. All of that's going to take time to put together.
Mhm.
And that's probably going to come due in July next year.
Mhm.
So because we're not going to be able, we have to vote on it. It won't be until it's awarded. And then after that, and they're probably, before they give us a nickel, they're going to want all of this in place.
Right.
And so that means that there's going to be a lot else going on. Maybe
Sort
not,
of.
yeah, sort of, not FEMA related, but gas tax related. We have no idea what that's going to be.
No,
Right, but what you're gonna wanna do is you're gonna wanna know, somebody needs to be responsible for knowing what the restrictions are. And then again, I suggest, can't tell you to do this, but best practices would tell you that you need to have controls in place over that. Now, that doesn't mean your control in place is that, Teresa writes the check and, takes it out of this account. That's a process.
Right.
The control is something, as I describe it in rudimentary terms, because it's easier to understand. A control is typically something that you do that's a real pain in the neck, that you don't need to do, but will double check that you did the process properly.
okay,
And so it usually means a second set of eyes signing off on it, somebody else looking at it to go, yes, this expenditure complies with whatever the restrictions are that the gas tax is restricted to. And again, sometimes there's great latitude in that, and so much better to contemporaneously be documenting what your thought process was in how that qualified as that kind of expenditure.
I guess the other point I'm making is that if this comes due in July, and the next year's audit is starting, that may have an impact on our ability to provide information to you. And again, there's a question of flexibility on your part in terms of being able to understand that we're putting something together and that is the question is can you be flexible with that and also keep us on track for an end of the year audit?
Yeah, no, I mean, we've been highly flexible for, now you're making me do the math. But for basically all except for 2 years. I mean, unfortunately, it's been the last 2 years. But, you know, I mean, last year was some inflexibility because, again, we pushed into January.
Mhm.
And if the goal is to get it done by December, there's no reason that shouldn't happen. As long as you're prepared in time to get that done by December, we've got all the flexibility in the world. We can work with you on that. It's when it pushes into January that it becomes difficult. And, you know, 2 years ago, I can't remember, 2 years ago or 3 years ago, you know, I was calling Jim, going, Jim, you know, because Teresa's busier than one on paper hanger over here, whatever the last FEMA go around was. And finally, I just, you know, I wanted to make sure that Jim knew that we were waiting. And so I'm on the phone with Jim going, Jim, come on, we want to go. And Jim's like, listen, you need to chill out because you're going to kill this poor girl. And so we backed off in that particular year and went, okay, we're marching to your drummer. And we do that all the time. So we do have a great deal of flexibility, provided that we're going to wrap everything up within that 6-month timeframe. And that doesn't make us any different than anybody else. I think again, what does make us different than anybody else is our willingness to help you get across the finish line. What I find from some of these firms is that the auditing profession has changed. And so in the 20+ years that we have done your audit, when we come out to do your audit, your equity has never reconciled. We have a perfect track record. Every year in the history that I've been here, equity has not tied. And so we work with you to go through all the details of all the equity accounts and see all the things that canceled out and all the things that didn't. We work to get you across the finish line. I guarantee you nobody else is going to do that.
Let me ask you, why is that, do you think, in your opinion, that we have that issue?
It's big, well, you know, we talked about it at the audit committee level, which deals with the facts that you've got all those zones that you really don't need anymore. But it makes the fact that you wind up with all of these interfund transactions. And again, that in and of itself, you know, shouldn't be that big a deal. Because again, each transaction should balance itself out within equity. But there's so many of them because it's every time you're allocating something, it's just the volume is there that just creates the opportunity for it not to be correct.
Okay.
Now, again, if you had a team of people that had the ability to come in after the fact and get you to the stage where you should be to be properly prepared for the audit to begin, they would have reviewed all that, they would have caught all that, and they would have fixed it already. And so this is what I'm telling you is going to happen, is that another firm is going to come in, they're going to, you know, we got all the flexibility in the world, don't worry, you know, we're going to get all this done. And then they're going to come out and they're going to go, on day one, they're going to go, your bank doesn't reconcile, your equity doesn't reconcile, you're not ready, we'll be back when you are. And then you're going to call me and you're going to go, because they're going to tell you, you need to hire another accounting firm to come in and help get your books in shape. And because I've done it. I've done it for the Encino Wastewater Authority, I've done it for South Coast Water. They hired me to come out, and I guarantee you, you're going to pay me more to clean it up, because that's an hourly rate. Now I'm on the team. I'm not fixed fee for that. And so you're going to pay for the audit, and you're going to pay for the cleanup.
If we wanted to go that route
Mhm.
where you come in May and don't audit the books, but basically get them ready for you to audit, how much more, just based on what you've seen in the last 2 years, how much more would that cost?
Again, it depends on the size of the organization.
No, here's us.
Again, you know, having not done it, it's difficult to say, but I'd say 10, 12 grand. That's a guess.
So basically, because that's really, I think, part of the problem here, we don't have the person power, okay?
That's
Yeah.
exactly
To
it.
get this all
That's
done
exactly
with
it.
all the other stuff we're doing.
If I had more time to like, look at my general ledger and,
Right.
I'm just helping out, I'm just barely surviving here, so, I mean, we've talked about hiring someone, so.
But that's the better route to go.
Sure.
And that's
Because-
what we're.
Because it's a once a year thing. It, you know, again, you can hire, I mean, you know, Pico Water District has a guy that does it, you know, kind of serves as their controller. He comes in every month and adds that layer of control where he comes in and he, you know, makes sure that the bank is reconciled. So he's signing off on all of that. So he's coming in after the fact. He's making sure that when you've got your accounts receivable, or in this case, your taxes receivable, that, you know, that reconciles, you know, that what we've looked at, what we've assessed versus what we've received gets us to the number that's on the trial balance. So these are all things that we're cleaning up.
I
Right.
think what we were thinking though is to hire a full-time person to help in finance. So to free up, so there's time to, I mean,
To do all
Well,
that,
again,
yes.
again, you would be the judge as to whether or not your need was enough that you needed another
because
full-time
there's other
person.
areas that they would be used,
Well-
GIS, the trash,
Plus, yes,
you know, all those
the
things.
county side,
More than-
it's
it's
more
more
than
than a full-time
tax,
person.
setting up,
Right. But
setting
again,
up controls, sure.
but then, again, begs the question is, you know, what is the skill set that you need? Because if you're gonna bring in somebody who's gonna serve under Teresa and, you know, help her get the disbursements done and then go do, that's a different, that's a
Yeah.
different skill set than what I'm talking about.
Right.
Because you need somebody at a global level, but at a higher level to come in and actually serve as a reviewer of what you're doing now,
Mhm.
not somebody that helps you get the processes done. Because you don't need more processes, you need more controls. Because it's very difficult to have much in the way of controls when one person does something.
You said there was a guy at Pico, there was a big gap of years, but when I had my cities, I did just that. I had a treasurer, who was also a CPA, retired person, who basically did what your Pico guy is doing. And he didn't do the audit.
Exactly.
He was being audited too. He was
That
part of
you
our
can
team.
find, you can find
Were
a
they out there
semi-retired guy, because they, you know, that's what they want to do. They want to come in and they want to work for 8, maybe 10 hours a month.
Right, he'd come in a couple of days a
And
month.
that's it.
And then in May and June, he was there a lot.
Yeah.
Getting everything ready. And then.
And then he goes on vacation because he's tired.
Yeah, right.
But then what happens
Exactly.
in the meantime, if you do something like that for Teresa, if we do have FEMA and other things coming up,
And that's why, you know, we really
yeah.
considered that, it just,
Yeah, we need to think about it.
the
Mhm.
rang bell.
You've got
That
different
resource.
needs, but, you know, what I'm talking about is more, your need is more consistent
Mhm.
than, you know, yeah, every third year we have a flood and we're overwhelmed with
Right.
FEMA. At that point, you could bring in temporary help.
Right.
That could provide you a skill set to get the volume of transactions done. But you use Teresa's experience to put together your FEMA packages, and then you still have your treasurer, for lack of a better term, coming in and reviewing the monthly close and certainly the year end to make sure that equity reconciles, the bank is reconciled, those types of
Now,
things.
there's one other thing that we've talked about in the past, but I'd like to bring it up and see if you have any different thoughts about it, and that's our CalPERS unfunded liability. What we should be doing with that, how we should be addressing that. First of all, it doesn't seem to appear on our financials.
Well, you're not separately, because it's all wrapped into,
Sure.
again, when you're talking about your your CalPERS, your share of the liability, and I forget the number, but it's usually an astronomical number.
2 to 3 million.
So so a district like this has a liability of 2 to 3 million, and that's the present value.
Right.
Like, how is that possible? And I don't, we've talked about this before, I don't love that pronouncement because the way they created it and the deferred inflows, deferred outflows, you wind up with these huge swings, and I've even seen them where, again, if you have a year where the market does really, really well, that's one of the inputs. And so you kind of accelerate it, it starts looking as if we're always gonna get these kind of returns. And all of a sudden, your PERS expense can actually go negative. We all know that isn't true. When the pronouncement began, and this is what I really hated about it, was the original pronouncement was like a 10-year phase-in. So I had a district that had put $2 million, funded it with $2 million. Their, using round numbers, funded it with $2 million. Their 10-year implementation, they knew they needed to get to 10 million. So their 10-year implementation was $1 million a year. So in year one, because they had put in 2 million, but their amortization was only $1 million, the audit report reflected under John Septic County principles that they were overfunded by $1 million, even though we knew that they were underfunded by 8. So that's why I don't love that particular pronouncement. But from what I can tell, I don't see that you get an awful lot of benefit. And there are different schools of thought. Again, do I want to pay my pension liability with interest paid or interest earned? But I think that because everything gets pooled, it's not like you have an account there that says, oh, we put in all this money, so all this earnings comes back to us and we gain all this benefit. They just have these actuarial projections. So the pronouncement itself doesn't tell you when you have to fund it. The funding requirements of PERS are going to tell you when you have to fund it. And, I'm kind of old school when it comes to business, which would be, why would I pay a bill before I had to? And I don't think that's what your employees want to hear. I think they want to know that, hey, let's get this thing fully funded. And, but I will tell you that that's part of what got us in trouble in the first place. And this goes back to the 80s, which was when, again, when the markets were really hot and everybody was making money hand over fist, everybody's PERS was overfunded. And so this is PERS' fault. PERS actually went to the districts and said, hey, let's up the benefits. And so they have the benefits. And again, the market doesn't stay hot forever. The reason they do this 10-year trending is because you're going to have good years, you're going to have bad years, but over 20 years, this is how it's going to work out typically. So when you have the benefits, it just created an astronomical cost. And that's why everybody's, even today, still underfunded. Makes no sense. PERS been around for forever, and we still haven't caught up. That doesn't make any sense. But I would, for me, if you put the money in today, the people that are your ratepayers today are paying today's salaries and benefits and tomorrow's. And so that doesn't make sense to me. That's a personal opinion. It has nothing to do with auditing, but you asked the question.
Okay, and we have about a minute left, so if you have anything else you want to add?
Well, I just think that,
We have a little more than a minute, so,
I'll speak to all.
because that clock is fast,
Oh, it is.
So, we have about 6 minutes.
Yeah, I think, again, if you happy to rotate audit partners, if you think the district would be better served by doing that. My personal take on it is that if you've got a knowledgeable accountant, and we deal, again, Teresa knows that, if she can't get a hold of Ryan or she can't get what she needs out of Ryan, she's not bashful at emailing me, calling me, directly. So you go straight to me and, we get a decision made and we move on. And that, just again, the institutional knowledge of all the years. If you want to rotate partners, I'm certain that I can bring you another partner that would serve you just as well. But without losing that institutional knowledge, because if she had an issue that she needed the history on, I'm just not the hallway.
What's that requirement now?
It's a suggestion.
It's just a
and again, it's a common practice, but it's not steeped in the law.
Right.
That a common practice is that you rotate every 5 years. I have a district in Sacramento that I deal with, that their policy is you rotate every 5 years. And for the last 25 years, they have a CPA firm up there, and myself, every 5 years,
Between the
we just go
two,
back and
yeah.
forth. If you want a good CPA from Sacramento, I recommend her. She's very good.
A question about, you said you started in 93,
Correct.
but how long have you been?
12 years.
So at about 12 or 13 years ago, as I understand, they were using like a doctor's office
It
paper
was,
kind
it
of
was a
system.
pegboard when I came here,
Okay,
so.
what caused the change? Why did they decide to bring finance or accounting in-house? What were they thinking at that time? Like, you're the only
Well,
person I know.
the accounting was always in-house.
Just the general ledger,
Yeah.
everything,
Yeah, they had-
everything was in-house,
We-
but it was all,
Yeah, the software they used was Creative Solutions.
which we still
Yeah,
use, but they didn't have that payable module, receivable module,
Right.
payroll.
yeah, so I think they use McVie that's the brand name, if you will, like Pegboard Systems, it's kind of a generic rate. It gave you your monthly ledgers, and then
And those had to be entered into
and then
the general ledger.
And you enter that, and it's really a bit duplicitous. But
So what caused them to make this a full-time job?
again, it was always a full-time job. I mean, they had,
Jill.
I'm trying to remember Jill's last
Jill
name.
Paulson.
Jill Powellson, I'm gonna say Powellson.
So she was
Sounds right.
essentially the Teresa?
Correct.
That's right, because you came in when she went out.
That's correct.
Aha, okay,
That's correct.
okay.
And then I converted everything, so it was, got rid of that archaic.
We joined the 21st century.
Yeah,
And then you said something I forgot all about. The controller's report used to be due at the end of the first quarter. It's now like in the third quarter, right, January 30th?
Yeah, it's certainly
What
got to be done
caused
now.
that change on the state level? Because when you give people more time, they'll take more
Rather than
time.
take more time. I just think too many people were missing it. And there was 1 year where they wanted to revise the system. And again, this goes back, the state controller's report at that point in time was a glorified Excel spreadsheet. It was very difficult to work with. Because if you hit, the wrong cell, you jump and you have no idea where you were. But I think the state controller's office had trouble getting the report out for people to use.
Over there, or it's on
It
there?
was on their, as I understand.
I see, okay.
The only time something good happens is when, like that, is when the state's having the problem, not when
Right.
you're having
Yeah,
it.
exactly. Yeah, again, it depends on whether you use Jim indicates whether you think it's good or not.
Yeah, that's right,
I
exactly.
think that if you're given more room, again, I hate the fact on the tax side that they got rid of the mid-year tax extension. It just meant everybody just jumped straight to October and
Right,
said, all these
yeah,
people,
yeah.
they get extensions, so that dude's October.
So
Okay.
basically, also what you're saying is that if, what would make everything better, if we can reconcile every month instead of
Oh, absolutely.
audit, you know?
Absolutely, again, it's more work to do it, but you literally should get to the end of the year. And again, because most of what you do is contract, you've got payroll and you've got contract work. And so at the point that you reconcile the bank, if everything's, been done appropriately, you should be able to push print. Now, that's not different than any other business. Nobody can just push print.
Right.
You then have to have the time to go back and review it and go, okay, here's my bank record, is that tying out to my trial balance? Here's my assessments receivable, is that tying out?
Right there, that's where we have trouble, because I don't have time
Yeah,
to do that.
that's right. Here's what I've got listed as accounts payable. How late do we leave accounts payable open?
Right.
Does our accounts payable tie? Most importantly, and again, we're 30 for 30, equity doesn't tie. So we've got to get equity to tie. And that's always a time-consuming process. again, because of certain transactions going through between the zones. They literally have to go through, you have to figure out which ones cancel out. You have to figure out which ones don't, and then go, okay, well, where should they have been posted, or was this the misposting, or was the other side of this misposting?
On that question, I talked to legal. They see no reason why we can't just eliminate the accounting by zone.
By zone.
Is there anything you know of, AICP?
No, the zones were all set up originally because the assessments were done by zone.
Right,
Right.
And so, and they had separate accounts, and separate accounting, and you had to make sure that the money that you got in zone one was spent in zone
Right,
one.
right.
And
that's
all
all
that.
gone.
And
for
once that
22
was all
years.
gone, then there's
What's the
absolutely no
point of
reason.
accounting for it?
We shouldn't be doing that.
Yeah, I guess nobody asked the question, and nobody really knows how to give the
But
answer.
now,
Am I
does everybody, I don't think everybody pays the same.
Nobody
We
pays
But it
have
us.
to
doesn't
we have
matter.
to end this, okay?
Oh,
Let's
sorry,
go
I'm sorry,
ahead and
right,
talk about
okay,
that
you're right,
amongst the committee, because that's really our issue.
that's true.
Yeah.
But again, happy to help if I can.
Okay, anything
All right.
else?
Nope, that's it for me.
Okay, Mike, thank you very much.
Thank you very much. Again, I appreciate the opportunity. Candidly, I didn't expect it. But I do appreciate you letting me come today.
Good, thank you.
very much.
We should go into executive session
Yes.
to discuss a business issue. Okay? Do I hear a second?
Yes, I second.
Okay.
Is the recording off now?
You know what, yeah, probably.
This is a public meeting, we are being recorded. So if you say anything that's really bad, we have it on tape. So, you can't get away from that. Just the, since you met us, that Paul and I are the finance committee essentially, and also the committee assigned to find, to interview water potential. Okay. The process here is 45 minutes. We have 45 minutes and that's it. And we stop the meeting at that point. We'd like you to, if you would like, to make any comments you'd like, or presentation or whatever, start. And then we would open it for questions. Of course, if you have any questions of us before we get started, you can certainly do that as well. But right now, the floor is yours.
So I've been auditing government agencies since April of 2000, so I've seen quite a bit. I started with school districts at African Child Gain Company. I don't know if you guys are familiar with them or not. They used to have quite a few districts down here. I don't know if they still do or not. They're not in existence anymore, but so that's kind of where I started. And then I actually worked for a school district for a year and a half or so. And then I actually went to Inland Empire Utility Agency, which is over in Chino. And so I had some, waste processor, water wholesaler. So I had kind of some experience on the other end of the table, so to speak, with the accounting side. And then from then, I just decided to start my own firm. And so then I started the school district, but I happened to pick up some cemeteries as well. And then after that, some other water districts. So I would say that while my specialty is probably school districts, I've done quite a few other things. And probably the most different now would be the city that I audit. And so that's up north in the city of Big. So nothing too big, but still they have a lot of different things, like utilities and things like that. So I have experience, with Gatsby and all the changes that have kind of happened through that over the years, and kind of developed some, I don't know if expertise is quite the right word, but at least experience with some of the different accounting systems that different districts use, both school districts and special districts. And so I've just kind of, I guess, been around for a while. And my experience has literally been from one end of the state to the other. I used to audit down in Chula Vista, that's the community college down there. And then as far north as Crescent City, which is the border of California and Oregon. And then currently I have quite a bit in Jackson County as well, so. And then I do the bookkeeping for a fire district up in Iowa, so, which is Riverside County. So I have experience again on both ends with Riverside County. So.
Now, who would be working with you?
Currently, it'd be just me. So I would come out and do the field work, and then I do the report and all that, so.
You're a one-man show.
Pretty much, yeah. Yeah, we're looking to expand here probably this year, so just getting to that point where a lot of the firms, it seems, have just been, with the demographics, there's just a lot of retirements and a lot of people kind of getting out of the audit business. And so that's kind of starting to grow more than being able to just do it by myself. So that's where, like I said, probably.
And what process, what would be the process of the audit that you would see if we would engage in?
So what I usually do is I start with just kind of coordinating time. So I like to come out, particularly in the first year of a job, is come out, meet the staff, and so if it's a big enough job, I'll typically break it up to an interim phase and then a final phase. The interim being control testing. So I'll look at your cash receipt / collection. So whatever your the property tax money you receive, or if there's any fees you're charging, things like that, and just look at the controls for a particular month. And then I'll also look at the disbursements. So I'll just sample randomly checks that you've written in the year and just say, I want some back up to, usually I do about 30, which gives you a good, kind of cross section of what you're spending the money on. And then payroll, look at least one payroll cycle, and usually it's, some people do twice a month, others do once a month. So depending on how many times you do payroll, I look at least one of those, and then follow it through from time cards or personnel files that have the rates and whatnot to actually did get paid. If you're members of PERS, obviously I'll look at the PERS contributions and things like that. And then for the final, it would be, and one thing I should back up, I tend to prefer to be paperless. So anything you have that's already, in PDF or Excel, particularly the financials or the reports out of your financial system, I like to have that in Excel so that way I can run through the data a lot quicker and more efficiently. It also prevents the district from having to, keep running reports for me. So I tend to like to have those laid out before I come out. And so that way I could have kind of the sample selection. So I'll say maybe the week before, say, hey, give me the, general ledger is kind of the easiest one to do. And so I'll pick, disbursement sample, payroll sample, things like that. Send that to the client, say, hey, here's what I'm gonna be looking at. So when I do come in, I don't have to spend as much time at the site to, because it's interrupted to have an audit. I get that. So it's as much as I can do to not get in, the way of the operation, what I try and do. And then for final, it would just be, depending on what your balance sheet looks like, you're probably got cash, I'm sure you've got cash, whether that's cash in county investments, things like that. We'll just look at the statements there, and then whatever receivables you have, pull, some samples of that. And then if you, the property tax, actually property tax, easy enough, I just download that from the county's website. So there's a lot of things that I go not necessarily to the district for, because, if it's, state grants, like my city, they get a lot of stuff from the state controller's office. So I pull a lot of that stuff down from there and even ask the client for same with school districts. Most of the school district grants are on the state's website, the CBD website. So I have that all pulled down before it can come out. And so that's, in the old days, we call that a confirmation. I'm trying to hear that term as much anymore, but it's basically a third-party confirmation of what different revenue you would have. And then payables, same thing, just kind of go through and say, you see disbursements from July 1st to whatever date I'm out there. Look to see if there's something that should have accrued that was not. And then if you got pension, I pull the PERS. There's a tool, and it essentially calculates which PERS liability it is. I can't recall if you guys are the PERS or not. You are. So then, I just say, hey, give me your, there's on the PERS website, when you do your PERS reporting, there's a kind of a summary of what the contributions to the district were for the year. So then I just say, give me that, and then I'll just dump that into the PERS spreadsheet that kicks out what the liability for the district would be. So then I just is, so.
What's the time frame here? When do you start and how do you,
For
give us,
this-
give us some milestones in terms of dates.
Yeah, I mean, part of it depends on when you get your books closed. So that usually sort of determines the start date. And in terms of, you know, if I've got to do both, like an interim and a final kind of at the same time, you know, you're looking at field work of probably for this side, I think I looked at probably 3 days, maybe 4 days of actual field work on site. And then once I get it, usually I can get everything, you know, vouched out, if you will, and start a report. And then my game plan is to get a draft of the report turned around next week. So then, now one thing I do require is that the district actually review the draft and look at the financials that have come out, and once they review it, then they give me their updates or their revisions, whatever they have, and then kind of go that way until we get it issued. So some of it's dependent on me, some of it's dependent on the client in terms of getting the when the report actually gets issued. But obviously, we look for no later than December 31st for the issuance date, and I think that's what the state I know has been, because of COVID, they sort of pushed that back in the last couple of years, but I'm sure they're probably coming back to the normal few days this year. So that's my expectation.
How do you handle, since you're a one-man person here, band here, all the GASB 68 reporting, do you go to a third party?
No, that's
Or
right.
you can handle that?
No, that's all. See, that's the thing, is that all comes from CalPERS. Like, there's like, you know, I've already pulled down I can't recall what the technical title is, but it's essentially the schedule that has all the agencies in it. It'll have what the proportionate amounts of the assets and liabilities are.
Yeah.
The only thing I would need from the district is the very first year they did an actuary specific to the district, so I would need that. But other than that, it's all CalPERS. And then whatever your contributions are.
Right, gotcha.
So one of the things we had this year that, and there are two questions here, because one of this relates to flexibility on your part, and one of it relates to FEMA. We had a terrible flood here a couple of years ago, and it caused several $1 million of damage, for which we had received, I think to date, about $1.5 million, maybe some more to come. But FEMA requirements were fairly stringent in terms of being able to go through that process and actually get money. We have a one-person finance office, and that put a tremendous strain on that office because those requirements interfered with our ability to provide information to our auditor. So what experience do you have with FEMA? Have you had any of that? That's the first question. The second question is how flexible can you be? I mean, for example, this year, we didn't get everything done until after January 1st. And if we do that, would you have the time at that point to help to complete the audit? Those are two questions.
So the first question, I had tested a FEMA program probably back when I was doing school districts at DTD. But the reality is, with all federal testing, regardless of what federal program it is, they all fall under what's called they call it uniform guidance, and there's what's called a compliance supplement that comes out. They all have the same, I think it's 14 different steps that are applicable to every, I say that could be, that's like sort of globally what could be applicable to any federal program. So then they have what's called the matrix of compliance, which says, here's the specific steps that are actually required. And so then I always pull that. So the 2022 one is actually available already, which is the fastest it's been available in quite some time. So in terms of actually working with FEMA on that, I haven't dealt with them too much, but they wouldn't have anything more than what's in that compliance supplement. I'm very familiar with that. In terms of being flexible with because you've got these other requirements that you're trying to deal with, that the audit is sometimes pushed to maybe not as much of a priority, then we just navigate that as it comes up. It's not a problem for me if you wanna, you know, if because you sound like you actually have a pretty small operation in terms of manpower as well. So therefore, we just work with that, and if it's one of those things where, you know, it has to get pushed to January, that's not a problem. That's what that happened to a lot of my clients. 2 years ago, they all went, you know, past January, but then we got maybe half of them or so completed prior to January, and the other half probably after January. So it's just, that's definitely been something to navigate over the last 2 or 3 years, is just how are people reacting, you know, in terms of, I think pretty much everyone now is fully back to the office, but you do see, there seems to be what I would term the COVID hangover, where it just seems like every client I've been to seems to have, they're just a little rusty in things, in different things. It's not the same thing a lot of times, it's just a little different. And so I would expect that if we have to navigate that we just deal with it then. I might have to come out, complete the audit, and then we may have things we're waiting on for the single audit part. That's another term for federal compliance. And if that's what we have to do, that's what we have to do. It's
Now, you're not working with any special districts, so to speak, or
You
familiar
say-
with gas tax. Because starting in next fiscal year, we should be receiving gas tax.
okay.
And there are certain requirements for that, which we don't know all of it at this time. So are you familiar with that?
So the state, well, that's what I was saying, the state controller's office has a list of different apportionments. And usually there, they also have, if there's any requirements to it, they have links as to what those would be. So I know the gas tax because the city that I do, they get gas tax.
Oh, do they? So you're familiar
Most
with
cities
that?
get gas
So-
tax, so I am familiar with it.
So
yes.
when we receive it or prior to receiving it, is there some communication between you and like Teresa as far as how to set this up?
Yeah, we can, absolutely. That, as far as the accounting for, it's no different than any other grant that either a school district or any other special district gets, and so we can navigate that. What accounting system are you guys on?
We use Thomson Reuters, Creative Solutions accounting.
That's right, you did tell me that.
Yeah.
That's
And
interesting.
It's
Okay.
unusual because I know it's usually for,
Audit.
yeah, and we're our only client, so,
Right.
yeah.
Well, and I mean, I say that's unusual, that's actually, the audit software I use has what they call write-up component, which would be analogous to what you have. So while it's unusual, it's certainly not unheard of. So it's, yeah, I guess all the audit softwares do. And maybe that's why they do it, is when an auditor wants to then work in, you know, for a client, they don't do that too much anymore, but I mean, if they want to work in the industry that they were auditing, then it sort of is a familiar thing. So it makes a certain amount of sense, actually. So
If you run behind, do you bring in other people to help you? Do you hire some people?
I have not, no. Currently, I've just not needed to. I just can do it all myself, and so that's what I tend to do. But that said, I used to run a crew when I worked at the other firms I did. So I mean, probably the biggest job I ran would have been like Riverside School Unified, and so that was usually about probably a 6-person job that would go for a couple weeks at interim, a couple weeks at final. So it's not something I haven't navigated if I had to.
Okay. We also have, and you mentioned CalPERS. And you mentioned how you would deal with that and also responded to that question. What is your viewpoint on the unfunded liability? And what should we, as an organization, how should we address that?
That's a big question, actually. So I had this exact conversation with the fire chief at Idlewild, and this was the first year that they've been able to pay the unfunded liability. You can pay it over, you know, every month. They tell you how much it is per month, or you can get a 3.5% discount if you pay it all as of July 1st.
Which is what we do.
And that's a good way. That's basically a guaranteed 3.5% return on your cash. So if you're doing that, you're great. If your question is then what to do about it in terms of how in the future kind of thing, and knowing that it's probably gonna continue to go up as opposed to going down,
Well, currently it's about 2 to 3 million.
that's pretty high for a district this size. There must have been some prior staffing issues that created that. There's not, I mean, you can save up for it, and you can pre-fund it if you want, and if you essentially want to set up some sort of reserve to basically say, look, we're just gonna put, the requirement is say, what'd you say, it was $1 million, 2 million?
3 million, 2 to 3.
Okay, and how much do you have to pay per year on your?
It's 100,000.
Yeah,
Okay, so if you say, okay, we're gonna do 100,000, but we're gonna actually reserve 150,000, so we paid 100 this year, but we now have 50,000, and you wanna keep doing that, and then put that into some sort of, I don't know if you guys have LAIF or cash.
yes, like,
Yeah, put it in LAIF and you get a little better return. The returns haven't been great, although I think that's gonna start to change with the interest rates going up. That's probably what I would suggest. You wanna pre-fund it. And then, if you wanna come up with a schedule, say we wanna pay it off in 10 years, okay, that's what, and if you would like me to, kind of help with that, I could, schedule that out and say, okay, if you can assume, say, 2 or 3% return on LAIF, which I think coming up, that's not gonna be too far off, but it might take a little while to get there. And you say you wanna pay it off in 10 years, then you can kind of schedule out here's how much to commit to do that, with between paying it in July and then paying or reserving that other piece and just adding to that reserve every year. And then you can, what I would suggest is putting it as a commitment within the fund balance, so that way it takes board action to take it out. It takes board action to put it in, board action to take it out. So you gotta make sure you have the cash to navigate that, but if you do, then that's probably what I would suggest on that. And then, you'd probably be not in too bad a shape after that.
Another thing that's going to be coming up January 1st is Calc Recycle. And we don't know exactly what we need to do as the district. Record keeping,
And what is this,
this is the state mandated where we have to start up in our district having, recycling is what it is. So we don't know what's entailed with that. Have you worked with anyone that's?
honestly, that's the
doing that?
first I've heard of it, and so it doesn't surprise me that the state has something like that coming up, and so, but I have not heard from any of my clients about it, so I
You're not
certainly would,
familiar with what will be the requirement of the district?
yeah, I mean, that'd be fine, I'll probably check that when I get back to the office now. You got me curious, because, yeah, I haven't heard about that, but that sounds like something the state,
Probably your city does it.
they might, yeah.
I would think the city
Yeah.
would.
And basically it's instead of 1 or 2 bins, it's 3.
Three. Yeah.
And an organic,
Yes.
a recyclable, and then other.
Mhm.
And unfortunately, we may be responsible for enforcement.
Oh,
And there may be other issues that relate
We just-
to us on that.
yeah, no, I'd be more than happy, and that's a good point, the city, so my city client actually does have solid waste disposal, they don't do it themselves, but they contract with, I think it's Waste Management, but they do.
Right,
yeah.
And so but I'm sure that they are aware of what that requirement is, and it could be they've already been doing it anyway, so it's not really new to them, but they probably are aware.
We do the trash collection through a contract.
Okay.
Okay, like Waste Management, one of the competitors. But what's happened is now the state, we don't have full-on recycling because of our rural nature.
yes.
So when we add an extra trash vehicle to the streets, there's some danger in terms of our narrow width.
Okay,
And, parking, collecting trash, people come around a curve, somebody passes, that kind of junk. So there's that issue, and then the potential for fire, and then being way out in the wilderness. And then the extra cost. So many rural communities get what they call the rural waiver.
Mhm.
But Cal Recycle has decided we don't qualify because of some hocus pocus, they get. So anyway, I don't know that it really affects audit, but it means that we're going to be expanding our operations to some degree. And then as Robert mentioned, the auditing of our own citizens, tip the cans and make sure that'll be contracted back to third party, probably the trash company.
Right.
Most likely, but it's a lot more work for the staff
Sure.
here. So,
We have a unique, probably unique situation. I'm going to ask Teresa to describe this a little bit better, because it does affect our audit in that we have different zones. And historically, the money that we receive from the county, which is
Through an assessment.
through the assessment tax, gets allocated to these zones. And it's currently the allocation varies somewhat, like $105 to $115. And the expenditures that relate to those zones have to be allocated to those zones. So if that could mean that then means breaking things down into many parts and then reallocating it to each zone relative to how much they are getting. And this has created some problems in terms of reconciliation of accounts. Do you have any other description of that?
You did a great job, except it just, you can imagine our chart of accounts is a chart of accounts times 7. Because we got, everything is tracked in zones, so there's a lot more transactions going in there and a lot of splits going on, so it makes, reconciling, and if you're off, finding where that at a little bit more difficult. I guess, have you worked with anybody that does have that kind of structure?
So my fire district has exactly that. They have,
Really?
and not in the same way, but it very analogous. And so what they have is an assessment, and I actually do the fixed charge that has to be reported to the county. So they have 3 things. They have fire suppression, EMS, and mutual aid. So the fire suppression is historically the fire department. EMS came into being, I want to say, in the 70s, and when they did that, they did a assessment separate from the property tax. It's like, I'm going to say a number, I can't recall if it's correct or not, but it's like $700 if it's unimproved property, and then if it's got a structure, it's another whatever. And so which sounds kind of like how you guys have it. So then the way our chart account works is that we have the fund number in one field, then we have department number in the next field, then we have objects. So the objects are naturally, salaries, revenue, things like that. The departments are then split up between, like I said, fire suppression, EMS, and mutual aid. And so all we ever do is track the expenditures and revenue separately, but it all gets dumped into one fund. Now, if you want to say, well, no, we actually need to have the costs split like as restricted beings, that's fine. You would just, instead of using departments, you would use a fund to do that. And so most school districts, for example, they have separate funds for the different, school programs. If it's adult ed, it's one fund. If it's child development, it's another fund. So it's separately. There are people that can work in both of those, and their salary is just split between the two. They don't have to worry about the system generally does the bank reconciliation. They're cash accounting, but it works the same way. They have a mechanism within the accounting software that splits out the cash payments. It's one bank account, but it's split and allocated between the different funds. And then there's a term for that. It's all Fund 99 is generally what they'll do. And so it just kind of depends on how your accounting system is structured. If the question is, can we improve this and make it maybe easier, we certainly can look at that. And I have some insight as to what looks good on that, or what is maybe easier to navigate while also capturing all the requirements to make sure that, you know, the one zone is spent for properly versus the other zone, and, you know, really segregate that. Or maybe it doesn't matter since, you know, in terms of fund, but you do still want to split it out. For what we do at the fire department is we'll show like a schedule in the back of the financial statements that just splits out, okay, this is our fire suppression, this is our EMS, and this is our mutual aid. And we just show just that part, so it's just.
And then everything else is consolidated.
Right. And so so it really kind of depends on how it is.
Yeah.
Like I said, how the system can do it, and what all, and how much work you want to put into upending what you've already got, right?
Yeah.
Because you already have it in one place, it's like,
Yeah.
how much do I want to?
Yeah, I mean, it would be great, that's what we're thinking of doing, is consolidating everything, but you're right in the fact that everything is set up already for that, and the financials are customized, so all of that would have to be redone, which could be done, but it would take some time to do, definitely.
Exactly. So yeah, that's really, you know, I'd be more than happy to help with that, whether that would be an additional piece versus we can just roll that in with the audit, because, you know, it's, you're just asking my advice as opposed to, you know, needing me to do the horsepower behind it, so to speak. That's really all that would come down to.
Mhm. And it's very good, actually. I appreciate your comments about that. I mean, where are you located, by the way?
Venture, yeah,
Okay, and how far away is that?
it's about an hour,
No,
yeah.
depends on the traffic, doesn't it?
It depends on traffic, absolutely. I actually saw it at Temecula, down the road. So,
Okay, sure. Okay.
I saw it and I'm like, well, that'd be nice to get a more or less local one again. Biggs is not local.
I have one more question. You know, we run on a lean staff here. So let's say like a FEMA were to come up or some other type of project that were to come up and either pulls me away or I need some help, more expertise, say from you. I mean, I'm not saying that this would be included in the audit, of course, separate fee or whatever. Would you have that availability to be able to help in that regard?
Yeah. I mean, I say yes, let me qualify it with, depends on the time of year. If it's gonna be, say, September through November, I certainly would be able to answer questions, and how much time I'd be able to give it would be limited, but I still could answer the question, you know, at least, you know, if it's something relatively quick, I'll be available to answer that. If it's something like, wow, I really need to do some research in it, then I'd let you know, hey, I probably can't get to this until this time. But if it's a time where it's not quite as impacted, then yeah, it'd be great then.
Do you ever do prep work like May through June?
Mhm.
You know, helping us get the books closed?
Well, you gotta be a little careful with
Yeah.
that. So the books closed, the issue there is not so much, you know, time, it's more of an independence thing.
Right.
And so it's not that it can't be done, and it's not that it couldn't be navigated, but it would be a consideration. You'd have to look into how much you're actually asking me to do versus, you know, if it's something, I guess the way you look at it is management decision, you know, it's like, it can't be me making the decision for you guys. I can provide all the advice you want. I can provide all the resources you need in terms of expertise. What I can't do is actually say, here's what you should do as my expert. It's more like, here are the options available. You can pick any one of these up to what you
Right.
want.
But without going that far, just kind of reviewing the books where it stands so that we can make an informed decision as to when the books will be closed, whether it's going to be August or if the reality is it's going to be November or something like that.
Yeah, I mean, we certainly could look at that, and if it's one of those things where, you know, I think the way I would look at it is say, you know, one of the things that I've noticed with clients is capital assets, for example, seems to hang up districts, partly because there's different bases of accounting, and that what that means is in one basis, the modified accrual for your funds, you're just doing like an expense, it's just an expense out, whereas when you have your NBY, you capitalize, so you have to have your actual fixed asset listing, Well, by the end, your fixed asset listing and your capital asset listing and your expenditures need to be in agreement in terms of any additions or deletions, you know? And so if it's one of those, hey, help us make sure we've got all the fixed asset, not a problem. We can talk that through. Usually what happens, and I don't write it up this way in my work papers, but typically the auditor at some point came up with fixed asset listing, probably went back to GASB 34, which would have been, I think it was 2001. And that just gets rolled over from one year to the next. And so if it's a matter of, hey, I'm gonna audit it, but I'm also gonna like kind of make sure that it's, and really that's legitimate in terms of audit procedures, where what I find, for example, is I'll get a listing and say your capitalization threshold is 5,000. Well, I'll look at the list and all of a sudden I'll see stuff that's less than 5,000. I'll say, why is that in there? And then it's like, or the auditor did it from years back. I go, okay, well, it needs to not be in there. So I will adjust it out. What I'm doing is I'm cleaning up the listing, giving it back to you so that you now have more or less a clean listing. And I don't use anything beyond Excel. Excel works fine because it's got enough formulas in it that you can calculate what your depreciation, your current depreciation, or your beginning balance depreciation, what your current depreciation should be, and then that'll give you your ending. And so, and I always just use, if you have it in Excel already, that's perfect, and that's easy to navigate that. If you don't, a little more work, but it's not impossible. I can't believe you have that big of a.
Yeah, and well, with us, our roads, and when we reconstruct them, that the capital asset or the asset, culvert, so that's our big issue every day. If we, I mean, every year, if we have reconstruction, it's all got, it does take a while, but we haven't had that in several years, so it hasn't been an issue for us. All we do is slurry seal, we don't capitalize that.
Okay, yeah.
So, yeah, it could be something that we have to deal with though, when we get down and dirty and start taking care of some roads.
And that was really meant as an example to say, here's what I can help with, if, you know, in terms of getting the books closed, making sure all the things are capitalized properly. And what we can also do is, if we break up the audit, to do an interim, where I do the controls, and then at the same time could look at, hey, I've got some questions on these specific items, great, let's go through and make sure they're, and that way, yes, I can't answer your question, I could help from that standpoint. What I do tend to get away from is when they say, here's a preliminary set of books, give me a mini audit, and then we'll go from there. It's like, I can't really do that, like, but that question doesn't come up, so that's why I kind of want to make sure we different.
Anything else? Thank you very much. That was very helpful and appreciate, nice to meet you too.
Thank you. Thank you.
We're going to take a 5-minute recess. So you can stop the
I'm Paula Carroll with the Finance Committee, yes.
Jim Emmons, General Manager.
Nice to meet you, Jim.
And Teresa Snyder, Finance Manager.
Great.
Okay, so we have 45 minutes,
Okay.
and don't get kicked out. So, the way we like to structure this, give you some time to tell us about yourselves and how you see this proposal and where it will go.
Sure.
And then we will ask you some questions. By the way, you can also ask us some questions if you like, and that would be perfectly well, and we'd be happy to answer them. But the floor is yours.
Floor is open. All right, well, great. Well, we first saw the proposal come out there from CSD, I believe CSDA website and stuff, and I go, where's this? I've heard of you before because of our contacts with North County Fire District, Mission Resource Conservation District, Who else? Fallbrook Healthcare District, Fallbrook Land Conservancy. And I was at a meeting with North County Fire, and they're talking about, you know, where draw the lines. I guess they're going through the special district review with LAFCO in San Diego County. And they're wondering, you know, who's serving who and stuff. And they always talk about the Duluths and stuff. And I'm like, so it just, when it came together, I'm like, well, we're like up here on the hill. We're in Marietta Hot Springs, right behind the hospital right there. So I'm like, oh, we gotta find these people. Jared, go find these people. So Jared came by, introduced himself, said hi to everybody here. And, you know, we're like, hey, this is a great, you know, you're so close. This is what we do. So we do about, you know, 60 to 70 special districts around the state of California here. Specifically in regards to water, sewer, trash, for a lot of our community services districts. Temecula Public Cemetery became a new client this year. But someone like, kind of like you, you're doing a lot of the road and other aspect like that. Morro Hills, right over the hill here. Tom over at Morro Hills, and so you've been a long time client as well too. So we know what you guys do. You know, a lot of our special districts also have road funds and things that we deal with. So we kind of understand where you're coming from, police protection, or using the sheriff's department and stuff like that, making a contribution of either your benefit assessments or your property tax money to pay for that. So, and look over all your overall organization seems very familiar from your financial statements, your perspective. You're all into LAIF. We like that. That's good. Saw your pension and your other post-employment aspects there, and how that works and combines into the overall organization. The report, very similar. We presented again this year from auditing the financial statements, presenting the same type of footnote information. But again, this year we have something new what's on here. It's called GASB 87, and it's accounting for leases. So the one change that we would see there is in regards to, you know, understanding your lease commitments and your lease revenues. Now, special districts like to own everything. So we see a lot more on the other side, the lease revenue, long-term lease revenue contracts coming in from cellular antennas and other aspects. I mean, one of our water districts has 13 cellular antenna contracts because they're in the highest point in the valley. So everybody, because they like the aspect of a government organization, when you put a water tower on the hill, it's going to be there for over 100 years. You know, you're not changing. They don't like to get involved with a lot of changing of the real estate there. Maybe someone would sell it. That's going to be there. So that's why they like to attach themselves to a government organization for a long-term commitment. And so they have long-term lease revenue commitments from, you know, putting all different things around their towers up there on the hill for the water tower. So, but just understanding, you know, we've heard you guys, you lease a yard. That commitment would be something to go on there. Copiers, postage machine, to de minimis. And then understanding about the building here. You own the building, you own the building. Okay, so that's capital asset and that aspect. So that's taken care of there. That's already being recorded. But it's the other contracts that are out there that we're dealing with this year. So that's what we see as a big change this year. The other information, you're receiving now are you San Diego County or are you Riverside?
Riverside.
You're Riverside. Okay, so the collection of a lot of your benefit assessments is coming through their Riverside County Treasurer Tax Collector's Office. And that's accounted for through there. They have a really nice external reporting site to gather all that information that comes in to be able to break that down into the different aspects. And then now most of it, if it's a special assessment, some of that could go on if people didn't pay their property taxes. Because Riverside County is under a tier program that you will receive. You receive all your property tax money, but you might not receive all your special assessments. Some of them do pay for all that as well too, so.
I think we receive it all, whether they get it or not.
They get it or not. So your assessment will be passed through a full tier, and then any of the collections outstanding or.
That's theirs.
That's theirs. Property going for tax sale, they'll be paid first, and whatever's left over could be shared between you.
Actually, we don't get a cut of that. We don't get 100%.
Just 100%.
Yeah. We get a benefit assessment, and a tax, a
Property
special
tax,
tax,
property tax assessment.
which is added to the property tax that's so there. And we don't receive any of the property tax.
Yeah.
Because we weren't in time. We incorporated
After,
9 months after Prop 13, probably intentional.
yeah,
So we don't get a cut of that
yeah,
pie.
yeah.
But such as life. There's a lot of people out there, contract cities, that are all crying about that.
Oh, yeah, oh, yeah. Though, Mr. Jarvis, Prop 13 back then, so.
Oh, yeah.
So that's where we see the organization, that's where we see the audit. You do have a lot of capital assets and capital asset structure there. That's the biggest thing, you know, putting all the new activity on, anything taken off, depreciation schedules, that's really, because you're really not, I mean, you're not billing, so you're not receivables or anything like that, you know, you're not doing that much, but so, yeah, that's your biggest aspects there in regards to that would be overall your capital asset structure, your liabilities for pension, and your liabilities for your OPEB assets.
That brings up a question. I can't remember if I asked this already. Do you guys take care of all the GASB 68 reporting, or do you use a third party?
68 is one quick calculation.
Okay, so you guys.
Yeah, because the information's coming from a third party, it's all coming from CalPERS, you take your numbers, you put it in the spreadsheet, they give you an amount,
Okay.
okay?
Is that part of the fee?
That's part.
Is it in here?
That's, yeah. It pops into it turns into a change. So you put this column here, there's the changes between the 2 years, that becomes your journal entry, you approve the journal entry. So, OPEB, that's a different story. The other
Okay, yeah.
post-employment, the other
Yeah.
post-employment, that's done with an actuary.
Oh, okay, so you do go out for that, because that's a new benefit.
Yeah,
that
you would
just went into
need,
effect.
if you don't have a relationship with one,
We do.
yeah, we would put you with someone.
Nyhart,
Nyhart is there in San Diego. There's another one that,
is the one closer by it?
no, not closer by, but
I guess it really doesn't matter.
better understanding financially from a special district point of view.
Oh.
Yes,
Okay.
yes, yeah,
Good
so,
to know. It's good.
yeah, so there's someone else, if you haven't renewed already, there is another one that is
No, we
out
know.
there, that could do a quick calculation for you. Sure, go ahead.
So happy that's all these smiling faces. How does your team work as far as an audit like ours?
Yeah,
Who would we be working with? How do you do it?
how do we do it? All
It's
right.
been a long time since I've worked.
So, yeah, I stay in the top, penthouse.
Yeah.
I never
figure
You'll see me now, you maybe won't see me. No, we like this aspect of, we were under COVID for a while. COVID was there and we learned a lot of good things from COVID. We learned some really interesting aspects of that where, there's 2 or 3 different parts to the audit. There's the interim audit work where we're coming in, doing test of controls, seeing that, controls are sporadically, we test throughout the period to make sure, if someone was on leave or something, that someone was able to pick that up or do it. So we look at the controls that they're continually operating during the cycle of the period of fiscal year. Testing of transactions, looking at segregation of duties, looking at the approvals that everybody has during that.
Is that physically here?
That we learned, we during COVID, we had to test that stuff at the same time. So that was a lot of scanning and we payroll testing of payroll files. We didn't want any of that information. So Zoom call opening files, looking them on the Zoom on the computer and stuff like that. That aspect of the audit works better in person.
Yeah.
Physical paper, physical documents that you have here, unless you scan everything, then everything's already scanned, but if not.
Well, actually, that's one of our accomplishments. We're just about have everything, all our documents scanned into our cloud structure.
That's
So
phenomenal.
we still got a little
Yeah.
massaging and tweaking to do, but for the most part, we're pretty good with that.
And that's, we talked to a lot of our clients, right at the onset of COVID. And basically, we all talked and there was a lot of consensus of don't let a pandemic go to waste. Ask the board whatever you need now. We need this equipment to keep running, and be able to work remotely. And a lot of them board approved that, they understood. And the
We
system,
were a year ahead
Yes.
because, well, you can see, this is no fancy operation.
It's Mahal.
Yeah, it was back to the old 1970s file drawers.
Yeah.
This and that. And the board, changes and things. And,
Yeah.
so became time to, kind of get into the real world.
Yeah.
And so we'd actually gotten, the scanning process going, the equipment we needed, the IT, the software, that kind of thing, the cloud, all that. It just ironically happened about 1 year before, and probably COVID set us back because all the physical activity, that we had to go through, that's where we're still finishing up.
Right.
Finishing up. Now we can get labor, but you can't find any.
Yeah.
Yeah.
So if you know a good scanner around.
Oh, we know some high school students, some are
Out there.
Yeah,
Yeah.
yes, we are, some of the employees, we have, children of high school age. They come in during the summer, they do a lot of our tax scanning. They do a lot of-
I've used them over the years,
Yeah.
and now let's see, one's a doctor, one's a student.
Exactly.
So who exactly will be working with us?
Yes.
See us all here.
Okay,
All of us.
who will come on site?
Yeah, probably a couple of us. Typically we'll assign a lead on any job, so like myself or Stacy, and then our whole staff will work on various parts that will be assigned by the lead. So as far as the interviews, you might deal with an individual person who might be doing payroll, so they might talk to you specifically about payroll, but typically we keep one contact point to kind of filter through everything, making it a little smoother.
Let's say during the year that Teresa has some questions, journaling, whatever. Is someone always accessible to answer a question immediately?
Yeah, whoever the lead on the job is will be contact point throughout the year. We answer a lot of questions, kind of our philosophy audits. It's not so much as we're in there to find something, slap your hand. It's more of what can we teach you, how can we make you better? If it's an ongoing problem, then maybe we'll have a discussion, but it's more of this is what we see, this is how it should be. We'll agree upon the way forward. It's good.
What he's basically saying, we get to see 50 to 60 to 70 different clients a year. We see the good, the bad, the ugly.
So,
And part of that is how do we, because you're looking for as a board,
Mhm.
as a general manager, the one thing that we've always get the question, what's my ROI on an audit? What's my return on the investment? Is it just that I sleep good at night, that someone else is looking at it, or is there really true an ROI? That return on that investment that you're putting in there.
Mhm.
And the biggest thing that we've found for that is how do we make you better? Because we get to see the good, the bad, and the ugly out there. And we take that and we take those best practices, and when we see things here, see how you start to work from our interaction with us operationally. We say, hey, have you ever thought about this? Have you ever thought about that? And that's where we were able to bring that ROI to our clients. And you talk to any of our clients, they talk about that. We're here really to help you be the best you can as an organization. We can't make a journal entry. We can talk about it all day long. Okay, we physically can't enter it into your computer, but we can talk about all that stuff all the time.
What's the time frame of the audit? How do you see that?
Well, usually our period between April, if you were on our regular cycle, let's talk regular cycle, between April and June, we would like to come in and get all the administrative aspects of the audit done, all the testing of controls. We'll pick periods through the year and look at that. And then
Because that can be done anytime.
that can be done anytime. Yeah,
And some of the big firms do that. They come in February
yeah,
and test your controls.
Exactly,
Who's
exactly.
signing this, who's.
Yeah. but we're very heavy at June 30th. So we're doing audits all the way through December, finishing them up, because some of them have capper distributions and stuff for reporting. And then July, we kind of stay for the special district, state controllers report. So those are due at the end of January. Okay, so that's where we stay. Then we have a bucket of clients that we also have 1231. So we worked that 1231 work through about mid-April into May, and then we're ready in May and April to move on to the next fiscal year, closing then. So April, May, and June, as schedules permit, that's when we start with the interim test work at that point in time.
And then,
Sorry about that. And then after year-end close, information comes in from the county, information comes in from LAIF, information comes in from the other stuff to be able to close those periods. And once you're done and you feel that your numbers have rested, and you're good with a good trial balance, we've got everything, all the information in there, that's when we would come in and schedule you when you feel, August, September, October is your period to then, be audited. And we put together like a week period, and we're gonna focus on you. And we're gonna come in that week, we're gonna focus on those final numbers, test those final numbers to the information that you have. And that's another thing we found during COVID is you're here to support that trial balance. And we need your electronic documents to support that trial balance in our work papers. So we're really not seeing us at that point in time, because what I tell my clients, do you want us to spend, no, you're very close, but do you want us to spend 6 hours at your office and 2 hours traveling to and 2 hours traveling back? Or do you want us to work 10 hours on your engagement during a day and reduce our carbon footprint? They're all, well, let's reduce that carbon footprint, because everything is electronic now and stuff. We're all in the cloud. All of our work can be done anywhere. And we need your electronic interface to be done to support our work papers. We need that information. So you provide us with the trial balance and all the backup schedules and work papers for that. And then from then we just move right into the reporting aspect after that.
Now, this last year was an unusual year for us. Not unique, but unusual. A few years ago, we had terrible floods here. You may remember that.
Yeah.
And they caused a great deal of damage in our roads and infrastructure. And we applied to FEMA. And we actually got a very large award. I think we've received about $1.5 million thus far, and there's more to come. Unfortunately, FEMA has these very specific reporting requirements.
Yes.
The issue there for us is a couple. One, are you familiar with some of their requirements and how that may affect what needs to be done for the audit? And the second is that we are a small organization, and to meet their requirements, it caused some problems last year. So we were not able to necessarily get all of our information to the auditor, and it delayed the final audit beyond January into this year.
Mhm.
Now, the question is, how flexible can you be? Now, this year we don't have FEMA, but as far as I know, hopefully not anyway.
Still working
But
on it,
yeah, we're still working on something.
That's right, yeah.
Yeah,
But-
because they'll grant you a certain amount, and then there's a look back period provision for them to come in and say, this is what we estimated at, what did it really come in at, once you did all the repairs and everything that you needed.
Right, but the question is really, if we can't get all our information in, how flexible can you be? And how can you, for example, go into January and February? And if we needed something like
We
that.
made January.
Yeah,
Yeah,
yeah, we made the state
I
control.
understand that, but the question is, if we couldn't,
Yeah.
how flexible can you be?
well, we're flexible to work through that. I mean, we're able to do that. We're able to, by us being able to provide a proposal to you, we have secured a slot for you in our overall workforce aspect and stuff. So we can find that slot for you to be able to get that done. Yet, we really want to get things done and tied up before January, because the state controller, we don't want to be in trouble with them. Yeah, they'll send people in and go, give us our information, we need it for our budget.
I guess, for example, since we do run on a lean staff, like I am the accounting department, so if things do come up like that, for example, we're still dealing with FEMA, we got a lot of other issues going on. Like if you were ready for me to start giving you, bank recs and all that stuff, I'm still haven't even finished May. I have journal entries to do, so I guess what I'm trying to come across is, I probably won't be ready till probably in the middle of August to start giving trial balances and, the things you were asking.
Well, what we have, which is an upload SureLink aspect.
Mhm.
We put a list in there, we give you, so we'll set a date, okay? So we'll have our listing of items that we would be requesting from you to back up the information after looking at your prior year trial balance and stuff, and looking for that same type of information. We'll set that up, and as you complete those tasks, you would just upload them.
Right, okay.
And say we had a date for you of like September 23rd.
I guess I follow you exactly, but in the past, maybe with some other auditors, if you need to like have 2 weeks, or you need to, something came up and I gotta divert my attention from that to something else to work on. We usually had to go then to the back of the line because they went to every other audit because they're scheduling. I know you guys have to schedule that. So I guess what my question would be is, if that were to happen for, say, a week or two, does that push us back to the end of the line? And, you know, we will be going into December. We don't want that to happen, but.
It does push you out a little bit because
Yeah.
other commitments have already
Right.
kind of been made. The beauty of that is if we're in the office all the time, we can work multiple.
Yeah, you guys are close to
Yes, that's the beauty of what we found, what we learned during COVID was the final aspect of coming out, unless there's something really that needs to be discussed that we couldn't do over a Zoom or over the phone, that we're very good about multitasking and getting stuff done in the hours working in the office instead of having on the road for somebody else.
Is it necessary? You know, in government, we just keep doing it the same way all the time, right? It's pretty clear that without some staffing changes here, we're taking on quite a bit more. And we're kind of changing the way we do things. But it seems to me that it's impractical here that we're gonna have the books closed by the end of August, any year.
Any year, well, even, because we're still waiting for the final county reconciliations. And some of that doesn't even come until the final August period, even into September sometimes for some of that information.
So what if we said, we want to be your client, that's October 1 through the end of November? And then we can set that aside staffing wise, because there's too much going on in the middle of summer.
Yeah.
We're a road district. This is when we're doing all of our repaving programs, we're fixing pipes, all this stuff's going on.
It's best when it's, especially road, it's best to be when it's hot.
Well, that's the thing.
The curing is the best time.
If we haven't got a slurry by the last day in October, forget it, it's next year.
Yeah.
So all that impacts finance, okay, because we're pulling her here, pulling her there. I think we maybe just, we're being impractical here, thinking that because the fiscal year is July, that the county's got to shut down for that. It's usually about 90 days. You could just forget those guys, close the door, right? But maybe we close that door later because it's been a couple of years. We can't beat that.
Yeah.
And with what I got projected in the next couple of years, we're not going to meet it again.
Yeah.
And here we are, we're already 3 weeks into that zone of time. And what did you say? You're still wrapping up May?
Yeah.
So,
You could meet sometime in October.
see, maybe that's, it's just be realistic.
And then,
And then let her have that time. That's it. Teresa's shut down from September 15th. If you haven't gotten it out of finance, you're not going to. And then I'm the gatekeeper.
Yeah.
Something like that.
And you could interface with that.
Okay.
Okay.
Right. A lot of them we do. I mean,
Right.
we do have like, again, they're waiting for confirmations on things in regards to funding aspects of accruals that they have. A lot of our clients that, that do have federal programs, they're waiting for final commitments of things that they can book back over that period of time. We do work with harbors, we do work with airport districts. They have a lot of federal interaction with them in our aspects. So
Do you have any cities?
you don't know.
How about counties? Any small counties?
We put the line in special districts.
Okay.
Yeah, we own the aspect of the single or the, fuel multiple entity, type of funds. Like, regardless, most of our special districts have either our community services districts have in regards to usually a safety fund in regards to either fire or police, some have both. They have a road fund, they have a park and recreation fund.
Right.
And that's for the government aspect of it. Then they usually have water, sewer, trash on the other side for the enterprise aspect of that. So that's about the biggest of the multi-entity and organizations that we roll with, have those, and that's pretty much it. It's like a city,
Yeah, it's-
in the aspect of the funding and stuff like that. It doesn't happen.
Yeah.
And we may be getting the gas tax.
Yes,
Coming in July.
yes, next year.
Next year, so getting a piece of that.
That was
Yes.
my question for you, because the accounting for that, streets and highways code, if you've done any city or county work, it's a separate fund.
Oh,
It's
yes,
very,
yes.
very.
Yeah, that's prior life, that's
Oh,
prior
okay,
life.
okay.
I cut my teeth at KPMG and the first job I got on was, I was doing my time in county, LA County,
Oh, okay.
City of Santa Monica, City of Pasadena, City of Long Beach. Yeah, gas tax, that was my baby at Long
Oh,
Beach.
We need to be set up when that money
Right.
comes,
Yeah.
because we're the only CSD I can find in California that does public roads.
Mhm.
There's a lot of private roads.
Private roads.
Okay, but ours are public,
Public roads.
because
Public
again,
right
it was
of way.
around that Prop 13 time.
Yeah.
And we're huge, 33 square miles.
Yeah.
And almost 100 miles.
So a lot of them is, like Stallion Springs, they have their own, it's in their own community.
Right,
So it's their own.
we are not that.
Yeah, Bear Valley, they have their road, they have, they actually have a gate, you have to get through.
See, yeah,
Those are private roads.
ours are completely different, because they were intended to go into the county system
Exactly,
until Prop 13 hit.
yeah,
And then they came up with the CSD as a scheme.
Yeah.
To get us off that property tax, okay? The only problem is that the gas tax, the miles of road, Riverside County left that on the table, it's $1 million a year or something like that. But they're taking the other part based on population, so that's a couple million, and the registered vehicles. Anyway, so we went to, the legislature.
you were legislator, you didn't go to LAFCO, you went to legislature.
Yeah, right to them, because all we needed was a change in CSD law, but we couldn't get it through for political reasons.
Yeah.
So then we went to the county and said, why don't you just put our roads on, because you created them.
Yeah.
Okay. And then give us the money.
Yeah.
And that's where we're at in negotiation with the county, we think we're gonna get it. So if that happens next July, next year.
Yeah.
We'll have to be all set up for
For
that,
that.
as far as the accounting side, so it's gonna take some research into how you do that.
Yeah, because you'll be getting monthly installments from that,
Right.
yeah.
And I'm from city, so I generally know how to do that, but I don't know how to do your side. of it.
Yeah. Yeah, there's been some updates to the law in regards to over the years and stuff like that, but yeah, that's easy to help you guys implement that, so.
You also have the issue with CalPERS.
Who doesn't?
Yeah. Well, people that aren't in the state, the system,
Yeah,
but we do, and there's an unfunded liability.
yeah,
And
and
we
just,
have about almost $2 to $3 million
in liability.
in liability.
Okay, well, the first thing you're gonna
Let
see,
me ask you the question.
okay,
Right? The question is how should we approach that? From our district perspective?
well, yeah, the first thing that we saw when the information started to come out in February this year, we saw Stacy here as our expert with that, and basically we saw a jump in the reduction of the liability. I mean, we saw the first calculation we made, it was for Palma Valley Community Services District over here. It dropped almost because they were doing a payoff. They did an actual payoff of their CalPERS liability. I think it was 1.7 million or something like that. When we did the calculation, it dropped to like 952,000. Because CalPERS had a 22% gain last year, unrealized gain in their investment portfolio. So they amortize that over a 5-year period. Well, it dropped down, but now this year, it's going the other way. So now it drops down, huge this year, next year it's gonna go back up. So,
Is now the year to,
no,
no.
No.
Reverse that.
no, it's not. Now is the year to keep your, as much as you can in life and watch it grow. You know, with a rising interest rate aspect. Hopefully you'll see your returns on your investment go up significant this year as we're seeing a rise in interest rates. Okay, so
So what's the long term on
the
this?
long-term thing in there is we have to understand it from a cash perspective is what is your annual contribution?
About
Okay,
900,000.
yeah, 900,000, you have your UAL that you pay this month in July unless you want to pay it.
We
all.
pay it annually to get that three.
Yeah, you have the 3%. So you make the one payment right now in July to pay your UAL.
Yeah.
And then your commitment with salaries throughout the rest of the year, okay? That, you understand, that is your commitment, okay? That's really all the other number is a paper tiger. It really is a paper tiger out there, okay? And now, you know, when you weren't earning anything in LAIF or it was called LAF during the period of zero interest rates, LAF wasn't earning anything, you know? Now when you're starting to earn, and you're gonna see the interest statements just came out for LAIF. I bet if you run that, you know, you're gonna see, you know, compared to what you got in March 31st, this is gonna be maybe 3 times that amount.
Really?
Yes.
It might be over 1%, huh?
It's at 0.75, but it's gonna be a nice kicker when you see that interest return in this fourth quarter. We just ran a couple the other day.
Wow.
And so, I mean, that some of them, they got like, you know, 700, say you, for an example, you got 700 or 800, you know, dollars or whatever on interest at March. The next one was 2,400 at June 30. So we're seeing a large increase there.
That's good.
Yeah, that's going up. And we're gonna see that continuously, you know, because LAIF stays very liquid. The problem is the unrealized gain is a huge negative. It's 0.98. So when you calculate your overall investment earnings for the year, you've got this trail of cash coming in, but at the same time, you have this huge unrealized loss because they're still holding 4% paper because they bought it out here to stay liquid and the market's at 8.
Right.
So that is worthless, the 4% is worthless.
Right.
But they hold it to maturity, they get all that money back. But on the paper, if they had to liquidate everything on June 30th, you would be part of that loss as well, if that's what it's considered and stuff like that. So the CalPERS is really paper tiger right now. Watch that, see what happens, see your investments grow as rising interest rates. CalPERS, hopefully their investment portfolio will turn around as well. Because that aspect of a benefit does not work very well unless you have significant fixed income returns. Okay, not the equity market, not the commodity market. You have to constantly sell and buy to make that spread on an equity. But this thing works, CalPERS works very, very well when we have a decent 2, 3, 4, 5% return of interest rates. This going to a zero interest rate aspect just hurts that type of annuity because that's what it's geared on. That's what it's based on. You know, 5%, those investment earnings continuously, you can really plan. You can't really plan. When you buy something, you're going to hold it to maturity, you're buying it at 5%. You know what you're buying. If you put your money into the equity market, I mean, look, Mr. Musk just lost $500 trillion or whatever he was working in Tesla. That just isn't sustainable for an aspect like a CalPERS. But them to buy a 5%, buy a 7%, buy an 8% note out there, it works very well. So I would watch and see where the market's going to go. If we're in a rising interest rate market now, great. Let's see where it goes. I mean, other aspects of the market, real estate's going to suffer, other aspects are going to suffer.
On the other hand, as the interest rates go up.
Yeah.
The unfunded liability increases. I mean, that should be the way. it
Well,
would
the
be.
unfunded liability will decrease because of the investment earnings being put on top
I
of
see,
that.
okay.
The investment, that's what you're there to. Because if you make, say you're gonna make $1 million contribution to CalPERS to pay it down. CalPERS has pledged that they're gonna make at least 7% on that investment, okay? You're handcuffed from the Citron government code that says you can only get what laid for. If you want to go out and buy other securities, you're handcuffed to that market. That's why LAIF is a beautiful product, because it's something she doesn't have to worry about. You don't have to worry about. You don't have to worry about. You're not meeting with the treasury manager or trying to pick the best, things out there, buying CDs, all these different CDs everywhere. It's a revolving fund. It trails the market. It trails behind 60 to 90 days of what's really going on out there because of its liquidity. To be able, if you need all $6 million tomorrow, they'll write you a check. No problem. 24 hours, you can get 6 million in your hands, no problem, if you need it. But that's the best thing. LAIF is the best product I've ever seen. I know a lot of nonprofits, a lot of mutual water companies, we're quasi-government, can we get in there? They all want in because it's great for the product, so.
Have any other questions?
Well, I don't know if you're familiar with the upcoming Cal Recycle that's going into effect. All right, and we will be under that.
Yep.
And there might be some bookkeeping or something. We don't know what's to come.
I think it's more compliance on the operational aspect.
Okay,
Our client is Costa Mesa Sanitary
All right.
District and stuff, and that's, they are the trash people.
yes.
And, either all of the green or the biological, I guess, I don't know, do you call it biological?
Yeah, organic. It's
Ecological,
organic.
organic waste. Organic waste or whatever are going into, now into the green bin.
Right.
And it's more of an we heard from one of our Heber down there in Imperial Valley. They're having a big thing with they have a contract with Western Waste Management.
Okay.
And the implementation that they're going through because they're like almost a 85% Hispanic district. So their waste management is asking them for help in regards to the education
Yes.
that are going out to all of the customers there in regards to really the Hispanic aspect of teaching them, this is the process we're going to be going on. And if we don't, we're going to be audited and stuff going out there.
And we also have to police all this too.
Yeah.
So,
Yeah, I mean, it's the same thing with the water district and stuff like that, where the State Department of Water Resources and, they want to push everything down to the local level.
right.
They don't want to be the cops. They don't want to do it up there. So they're pushing all enforcement at the local level for water district. Same thing here with trash. They're trying to push that all down to local enforcement as well.
And that's one, we got roads, but we've also got trash.
Yeah.
And trash was easy. CR&R just took care of
They
it.
took care of it.
Now, we're gonna have to have a Department of Trash over by January first, with all these things that we have to do.
Exactly.
Unfortunately, CR&R,
It's almost like having a fog crew. When you deal with wastewater and stuff, you have a fog crew for permitting fats, oils, and grease. The fog, fats, oil, and grease. You almost have the same type of a fog crew,
Mhm.
fats, oils, and grease to police your restaurants and stuff like that, your permitting process. You're gonna have, it's not gonna be a fog crew, it's gonna be, a organic crew or whatever coming here to police the aspects of where your customers are putting their organic waste.
But now, is there anything financially that we have to, that's involved with this?
Well, if your contract for CR&R that you don't have the 3 bins already, you have,
No,
we don't, because we're rural.
we're rural.
And we should have the rural
should have
exemption.
that.
But they found some crazy thing, it's all based on census tracts.
Yeah.
So our census tracts bleed over into Marietta and Temecula, so they're counting those people too.
Yeah.
Even though they're in cities that have been doing it for years, right? So,
so are you in 1 bin or 2 bins now?
One.
One, yeah.
So we gotta go to 3,
So you're going to 3 bins.
but it's dangerous to put 3 trash trucks on our roads Because
narrow,
people pass
curvy
things
and-
and come around corners,
fire
that's
hazards.
fire. You know, those things burn up. Well, if it's in Temecula, they drive to a big street parking lot or whatever and let it burn, right?
Yeah.
You can't let anything burn up on the hill.
Yeah.
So anyway, that's why we resisted it. I think most of our people are, you know, ecologically minded, and they wouldn't own these properties that's putting all the good gases into the,
Yeah.
okay, but the state has decided that everyone will comply. It doesn't matter who you are.
Exactly.
And so I don't know that it really affects to a great extent these guys,
Yeah.
but we'll be able
Well,
to give you.
looking at that with your trash operator, have there, you know, there could be things about that if something happens to one of their vehicles or whatever. Do you have, like, is there any area that you have that you could, you know, like coming down the freeways, they have that brake lane, and then if a truck loses its brakes.
We have those that are secret, okay, there's
Okay.
8 of them. I don't even know where all of them
Yeah,
are.
that where the gravel is, that's a good place. If that is fully gravel, you know, and you do, you know, fire shrub maintenance there, back those off, that's a place that they can
Actually,
get.
we're doing that. It's just the concern of the board and community, it triples it, you know, the
Yes.
probability.
Right, yeah,
But I think we're at the point now, the board's gonna have to decide in the next couple of months, are we gonna fight for our exemption, or are we gonna just do it?
yeah.
See our-
Because it could be something that you would do a joint venture with them in saying, hey, we need a ditch place for you guys. You know, will you help us, you know, either do the fire, you know, break thing or the gravel, hey, we'll do this, we'll
No,
clear it out.
no,
You-
the state's attitude is, no, you do, you figure it out, and go ahead and tax them. This is the only law I've ever seen passed that says just tax the people at will. Don't come back to us.
Yeah.
The problem is, it's all these people that you're taxing. They're looking, for sure, it'll double their trash bill,
Oh, yeah.
you know, easily.
Yeah.
But now we're gonna have to have the staff. So I'm not sure audit wise, it's gonna affect you, but it will certainly affect our ability to get you what you need on a timely manner. You know, FEMA 1 year, trash next, or whatever.
Well, someone for you to talk to is probably Scott, the general manager over there at Costa Mesa. Yeah.
Oh,
So
I know the name. He's
Yeah.
a speaker there.
he's a speaker, he speaks a lot and stuff like that. So they're going through the same type of growing pains you are here in regards to that. Because they've been holding out with 2 bins for so long, and now they're going to the 3rd. Okay, so anything that he has learned, he's already built the wheel over there.
Yeah,
Something that you would just say, hey, if we buy you a cup of coffee, let me, let's, you know, rattle through a few things with you. You've got a chance to sit there and talk to either board members or the general manager and what they've done to get over those hurdles from going to 2 to 3, you going from 1 to 3. Okay, he may have some best practices for you that are there that you could just, you know, talk back and forth, and I know he likes to talk.
yeah, he's a good speaker too.
Okay, our time is about up.
Yes.
Just if you have any other closing comments? Anything, anybody else? You have 2 minutes.
Can we, who's who again here? Can you?
Senior supervisor manager.
Okay, and to just give us a little, tell me about you, Jared.
Again, my name is Jared. I'm actually a resident of Marietta since 1993. So I have in-laws who live in La Cresta. I have a lot of friends who live in Duluth. So I'm very familiar with the area and some of the specifics of the landscape up there. So I kind of really understand the trash and picture the layout of the roads up there.
Your background is in construction and the wineries.
Like I said, I grew up here. I worked at wineries for 10 years at Wilson Lake Winery. I worked in construction and finance capacity for several years, production framing. I've been with the firm for 3 years now. I've been CPA for 2 years. And really been in special districts the last 3 years. So
Stacy, your background is, you graduated, is it Humboldt, Chico? Chico.
Yeah, so I grew up in Paris, so not really close enough. I went to Chico, and then at Huntington, I worked in property management And then I've been with the firm for 4 years now. And I've been in several different departments in our firm, so I'm very good with accounting. So I've done some school districts, some tax work, and then most of my work is that specialist.
What kind of property management?
Apartments and homes.
Of course, we have a, she comes up from Cal State Northridge.
Oh, okay.
I grew up in San Fernando Valley. And I moved to Corona. In 2019, I started with something that's holding company. So I've been with them for about 3 years now, close to 3 years, doing specialty.
I graduated Cal State Long Beach in 1994, so I'm the good old boy here.
Thank you very much.
Yeah.
Went to KPMG, did my time in county for a long time, so yeah.
Thank you.
Thank you guys very much.
Thank you.
All
Thanks
right.
for that tip.
Yeah,
I'll call.
give him a call. Yeah, he's already been through those growing pains, so he may have some interesting tidbits for you.
Great.
All right.
Super.
All right, guys.
Thank you very much.
Be careful on your long trip home.
Traffic.
Yes. Thank you for accommodating our schedule, my limited day from Hawaii.
That's right, that's right. You were the one. That's
Well,
right.
well enjoyed, so.
We'll
It's a
talk to
nice
you later.
meeting.
Nice meeting you.
Very much.
Thank you.
Nice
Nice
meeting
meeting you.
Thank you.
Nice meeting you. Good to see you. Okay, take care.
Once you close, no, don't close the door, it's okay, just make sure they leave.
It's recording on.
No, we'll leave it on for now, because I actually don't think we need it. I think that the sense is probably that the burlesque group would be the choice, unless you all think otherwise. I think they have
No.
the staff.
You like this approach, the team?
Uh-huh.
I do too.
I do, very much.
Yeah.
It's nice that they brought all
This is
four of
what
them
I've
out here
been talking
too.
about.
This
All
is-
the extra, how you talk, you're giving you something.
Right.
Besides just some books, you know? And that's what I'm used to.
That's what he's.
Right, yeah. You can call him about anything, you know, or he hears about the traffic. He calls up, yeah. Oh, so-and-so, you know, he's our client. Blah, 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 blah. It's like they are part of you,
Yeah.
but when I came here, it's like, they're not part of it.
This seems more of a, yeah, like a partnership versus Izzy seems adversarial, more like.
Right. It's an audit, easier to catch us doing
Yeah.
something.
Why don't, you did this wrong, or you don't,
Yeah.
whatever.
That's all the special districts. That's what they work with.
Right. I'll tell you the one, I'm very glad you asked that last question. I was trying to do that. I mean, I think it is a problem that he brings these people and doesn't ask them to say anything. And does all this talking and
Yeah.
blah, 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 and blah, 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 blah. I hope you don't have to work much with him because you're gonna be on the phone a lot.
Yeah,
Yeah.
But anyway,
probably not, I bet.
You can't afford to.
From what I understand, I think I'd be working with Jerry.
Yeah, I think so.
I like his personality.
But I do appreciate your asking that question. I couldn't quite figure out how to, because I wanted it to make sure they knew how to talk, you know, and
That was good. That was
so that was really very good. But I wasn't.
They both got bachelor's degrees.
Yeah, I know you could see that in
I
the
thought it
book.
was more just a
Yeah.
typist, you know?
No,
he's-
no.
Okay, can we go into, we're still on the, we go into the finance committee
Sure.
meeting?
Sure.
Okay, everybody, do you have
I
any?
do not have an agenda.
I have one right here.
Chad, you want?
This is the last meeting I just signed. Oh, no, this is, I'm sorry, July 18th, right?
Here's your.
Yeah, I got it, sorry. I had the one below it, they said, okay. Okay, so we're now continuing our meeting, but this is the part of the meeting that is the agenda for the finance committee. And is there anyone that from the public that would like to make a comment? Okay. We've already done the presentations. We need to approve the minutes of May 17. And do you have any questions about those minutes?
No, I don't.
Okay, I signed them already. And then we have.
Saves.
Claims review.
Yes.
it's related. You have. You should have them all. Yours doesn't have claims in it.
I have it, I can see it.
Oh,
Here
here.
it is.
Oh, it's the one you signed, but.
Oh, okay, very good. Oh, okay, very good.
It came up earlier in the meeting that these huge Wildan bills.
Yes.
Well, Bill, I've got to talk to Wildan because I can't believe they keep their doors open. They're billing 4 months, 5 months behind.
Yeah.
But anyway, we'll keep their money. But this was almost all environmental. That's just going straight through to the environmental. firm.
Maybe they haven't paid them yet.
I don't know. Yeah. They must not, like.
Yeah, because those are huge amounts.
Right. I really think there's that, well, I think when you present this at the board, you should talk about that, what that's for.
Okay, because I have to break it down.
The breakdown, because I think it's
I think
it's
it's
good to
like,
get it on the record, why
like you
that
said,
bill was
it
so
is
large.
mostly Buena Vista, but there is 1 month of closing out Sandia Creek.
Right.
That was a huge one too.
So
So
let's get it, we're just.
I'll break it out.
Yeah, break it down a little bit, it'd be good.
Okay. And the semi-annual capital lease payment,
what is it? Yep, the building.
That's for this building.
yes, right?
When are we gonna own this thing?
I was gonna say, why do we call it a lease payment?
It's a capital
Oh,
lease.
it's a
Capital lease.
Yeah.
Okay.
So at the end, you make a dollar payment, it's
Yeah.
yours or something
Oh,
like
okay,
that.
I understand now.
Less than 3 years, it'll be paid off.
Okay, are we gonna continue to have CHP patrols?
Yeah, I'm gonna start backing them down.
Okay,
I talked to the gate folks, today, just to see
Yeah.
what's going on. And, it's working. They're not having, they have one guy that, tried to break their gate or something, but it was pretty minor.
yeah,
They have, about 150 people from Duluth that have bought access, which they are surprised that was so low. But again, we got about 850 homes.
My observation
Yeah.
of this
What do you?
is living right where I see Rancho California, the traffic has increased, so they're going around
you're
getting
taking
up
Duluth,
Duluth Road.
Okay, I'm gonna put out, the tubes. and
Yeah, I
start
think we should.
measuring. And it'll be 30 days, in a week or so. So, because you have to wait a little bit of time for people to
Get accustomed to it, sure,
so, we'll know in a month from now.
how the traffic is on
Here
Sandy
it's all
Creek.
gone. We measured it first,
Right, okay,
so we've got it all different places in the district.
but now it's on Duluth Road, coming Duluth Road, one Rancho, and going Rancho.
But I didn't put it here, it's
Well, but that's the way it
0.42.
right?
So,
Well, it's going some way,
Big,
It should be.
It's way down on
Yeah.
Sandy, because I drive that, and the number of cars there is way down.
Oh, sure, on Sandy Creek, but it's up on Duluth Road.
Right, I'm sure of that.
Yeah.
too.
but those are both county roads, that was always the intent.
Right.
Yes,
Of
yes, they are
cut through,
county.
Goes around using county roads.
Right,
So I'm
Right.
hoping that we get back to where it was designed.
Yes,
The big roads, that's why the county kept
and that is how it should be,
Right.
right.
and the residential roads.
Oh, absolutely.
Time will tell, we'll get our counts.
Well, no, I mean, Bottom line is though, that, you know,
Recommending.
Yeah,
I
we
was
did that.
hoping that
Oh,
the
okay, so you're gonna
traffic,
take care of talking about.
Cutting
no,
through.
it's huge, there's nothing big.
the ones that are
Oh,
just
oh,
cutting
okay,
through our
okay,
area
okay.
would get back on the
Yeah, we
freeway
did that.
because
I
of
mean,
the length of
that's what
time
we
it's
did.
taking.
Yeah.
I know.
Yeah, okay, and we didn't want them to be here or anything like
Well,
that.
we can talk about that, whether we
Okay.
want to invite them to the board meeting.
Yeah, how do you want to handle like recommending, we all agree to?
Why don't you invite them?
Yeah.
And,
See if they can make it, I mean, it's
and
last
they don't
minute,
have to
so.
come, but if they can send somebody, that would be nice.
Or they can even Zoom in maybe, if they
If we
can't.
have to, that'd be nice, they're close. They
Yeah,
can-
right.
Yeah, I'm sure they'll come, they'll send somebody.
Okay, Leif was 0.4%, and despite his enthusiasm, I think that's misplaced.
I agree.
I mean, big
It
deal.
would be nice.
Even 4%, getting 4% is better,
Yeah.
but I mean, that's not a heck of a lot of money.
I know,
And then there's that difference between 4 and 7.
That's right,
yeah,
That's a big number.
huge difference, huge difference.
right. I do think, however, that it's just a different perspective. We've heard 3 different perspectives on that, which is kind of interesting. We can think about that and maybe talk about that in the future. I do think, however, the other thing that came up that we need to put before the board is the issue of the special, not special district, but the zones.
Yes,
And
We'll research that.
that's right.
Yeah.
And also, the best way to achieve that. So I do really think there needs to come forward.
I
And
think.
Teresa also brought up, we've got to if we do that, we've got to reconfigure our,
Financials,
Yes, you
chart
do.
account,
That's right.
just everything.
how much time that's gonna
Yeah,
take.
it's
Well,
gonna
that
take
may
a
be
lot.
a thing to try to bring in somebody to
To
do
help
that.
with that.
That's what I was thinking, yeah, we go to that router's place and we say,
Yeah.
get it done.
Yeah.
Yes,
Instead of
Yeah.
thinking we always have to. do
Because
it.
all our financial statements are customized, we built them, so
yes, you
they
do.
have the people to do it there, that's what they do. We
Then
just
let's,
pay it.
let's,
And
let's
that's what should be done.
do that, if we gotta. get
Yeah, well, wait,
legal
yeah,
first,
okay, gotcha.
But I think we can do that.
I think that would.
And
The,
then,
the other thing,
Tremendous help.
I'm sorry, I hate to go back, but I did have a question. You see Gildan down here twice.
Twice,
Yeah.
yeah,
that's because of their.
different
bill.
times.
Yeah, it is. Buena
It,
Vista, Sandia Creek, and then just general engineering.
yeah, it was January, February, I think that's the first 2. And then we started getting March in, but there's still a couple months behind.
Yeah.
Or 3.
Okay, just explain it, please, because
I'll break it down.
we need to get that,
That's a huge
On
amount,
the
that's why I
record.
questioned it.
okay, we did the Leif. And, any good investment manager over a 10-year period will get you 5-6% minimum. Okay, and you know, so anyway, that's beside the point.
Yeah.
Anything else we need to discuss in the finance committee?
No, I think we're
Now,
fine.
All you're going to present it on
Wednesday,
Wednesday.
You want me to?
he's not here.
Oh, you're not
I'm not gonna
here?
be there.
Okay,
This is the
Well-
first meeting I've ever missed.
right, well, after we'll close this meeting, then we'll discuss.
Okay, very good, very good.
Okay.
I don't think you need to say a lot.
No, I don't either.
I think basically who we interviewed and
Right,
the features of and why we chose this group,
right,
that's about all you have to say.
okay, okay,
I think it'd be pretty
it's
simple.
fine.
I don't think you need to go into the questions that are asked.
No, I don't either.
And I think that,
Based on the questions that, but just say based on the questions asked, we feel that these would be.
and the
discussed.
presentation.
Yes.
And then a list of things that, why we think they are the best,
Okay.
big support group. people,
Larger support,
That's
group,
right.
that's right, yeah.
Special district.
Yeah, them here too.
Yeah.
Special district.
Maybe we could have them speak on
Right.
just a little bit.
Introduce
Introduce
themselves.
Yeah, that would be good, yeah.
Should I call him today or make him sweat a little bit and call him in the morning?
Oh, no.
Okay.
I think also, what was that other thing I was gonna say? You should ask him for a reduction in payment. Because, no, really, because everything is on the computer. They don't have to come here. They didn't know that, so that I'm only kidding.
I mean, where's he going with this?
I almost said that to him when he said, oh, well, why don't you reduce the charge? But,
Maybe I should be a real jerk and say to Teresa, no, I'll call them, see if they can come Wednesday night. You call Lizzie.
No, no.
How come you get the fun call?
But I'll tell you what, you call both.
I think,
No, you-
I think,
No, I don't mind.
I think what
You
you're saying,
want to-
Chrissy, is very simple. I don't think you have to say, but we
No.
really appreciate everything you've done.
Oh,
And,
yeah.
but the committee just felt that, and this is another thing you can mention, that best practices, and we really want to change the
Change
firm,
it.
get a different view, that sort of thing, but we really, really appreciate it, because if we do need some help, we don't want to say, we think we're a slug and we don't want to. So, So, and then the other thing I would say to the other guy, if you're going to call him, is we really appreciate your presentation. We think you're really excellent and provide wonderful service. But our major concern was depth.
Yeah.
And that if there was something that happened to you, we didn't ask the question, he may come back and say, oh, I've got 20 people. He said, well, I'm sorry about that, we didn't know that. That's right.
And I don't think he does, I don't think.
I know he doesn't, I know he does.
But he, he's out, he's, beating the bushes.
It's
trying to
good.
get ahead
Give
of
him
the
credit.
I have to tell you, I was very impressed with him.
Yeah. In 5 years, he'll have a firm,
Yeah.
a couple, three,
Yeah.
4, 5
Yeah.
people. But right now, he's got to do it Sunday night in his pajamas till he gets done.
That's right.
And that's just how you build a business,
I'm going to leave these things
Yeah,
here.
it's a meeting over.
The meeting is adjourned. So we can go off, no more.